Hi, I'm James Robinson, and this is my stock pick of the week. This week's stock pick is Ruger, symbol RGR, and I'm falling behind a little bit on my videos. If you follow me on Twitter, you'll know that I bought Ryan Airlines and then a couple days later bought Ruger. And so I'm switching up the order and doing the video on Ruger first because Ruger's down about 5% since I bought it. And so I thought it was cheap when I bought it at $70 a share. It's down 5% since then, so even better buying opportunity for you guys. So I thought I would switch out the order and do Ruger first, and then I'll do Ryanair next week. So as this video points out, I don't always get a chance to make videos immediately when I buy a stock. But whenever I buy a stock or sell a stock, I always put it on Twitter so that you'll be able to keep track of what I'm doing and when I do it. So real-time information on trades. I also will update you when I make new videos, and will give you other thoughts and videos that I find or articles that I find on the market that I think are relevant to value investors. So my Twitter handle is @RobinsonStocks. I also want to thank all of you who've subscribed. I'm getting closer and closer to my goal. I think I'm at 333 subscribers, so I'm a third of the way to 1,000 subscribers. And finally, you see here a map, which every time I do a video, it seems to add a couple more dots, which I really appreciate. I like to keep track of where my followers are. I'm really not making any money out of this video. I'm not trying to make any money out of these videos. But what I do get out of it is the cool feeling of knowing there's people all over the world who are watching these things. So thank you for all of you who've subscribed, and thank you to all of you who've let me know where you're from. And if you watch this video and you get any value, if you make any money off any of my stock picks, just take a second and tell me that you're from, whether you're from Iowa or whether you're from Indonesia. I'd still love to hear from you, and put a dot on the map wherever you are. This is the first of a 5-part series that I'll do on Ruger. This time we'll look at an overview, which is sort of just the fundamentals of the company, why I initially chose to invest in it, some interesting facts about the company. The next 4 videos will be in the operations, which is how good a job the company does at delivering goods and services to their customers. I'll do one on the balance sheet, which looks at the company's assets and liabilities, looks at its interest payments, tries to determine how safe the company is. I do one on dividends, and I do one on wealth creation, which is how good a job management does in creating wealth for the shareholders. So RGR is the symbol for this company. Its company name is actually Sturm Ruger and Company. They make firearms under the Ruger name. I wanted to touch base real quickly. I don't really want to get political with these videos, and I never will. My standard for investment is if the company is selling a legal product, then I will presume that it's fair game as an investment. If you disagree, then don't buy the stock. I have suggested, for example, you might buy stock in Altria. It's a company that makes cigarettes, and I understand some people don't like smoking, so ignore it. Don't buy that stock. I don't really care what your politics are, whether you agree with me or disagree with me. This is a company that manufactures a product. That product has a value, and people want to buy it. So hopefully, whatever your feelings are on firearms, you can just respect it or disrespect the investment ideas. So they manufacture firearms under the name Ruger. They have 2 segments, firearms and castings. Castings is a small percentage of the business, and it's really sort of allowing other people to make licensed knockoffs of their guns, as far as I can tell. They make single shot, auto loading, bolt action, and sporting rifles. They make rimfire and center fire, auto loading pistols, single action and double action revolvers, and firearm accessories and replacement parts. About 95% of their business is here in America. They sell 5% internationally. Most of their international sales are to either law enforcement or military. In America, they sell through independent wholesale distributors, typically in the commercial sporting market, and the casting and MIM parts directly or through manufacturing representatives. Sturm Ruger and Company was founded in 1949. It's based in Southport, Connecticut. The company has 1,839 employees. As of the date that I bought this stock, actually as of today, the company has a market cap of $1.162 billion. It has revenues of $568.8 million. It generates profits last year of $90.4 million. It gives it a PE ratio of 13.01. The company has a yield of 4.29, which an interesting thing about this company, and I'm going to talk more about this in the dividends, this company's dividend is tied to its quarterly profits that quarter. The dividend yield goes pretty dramatically up and down from time to time. It's an interesting approach because most companies that do dividends They try and set the dividend and never ever reduce the dividend. And even if they lose money one quarter, they still try and pay out the same dividend. So this is a little bit more honest in terms of they're actually saying, hey, we had a great quarter, we're going to give you some of that money to the shareholders. Theoretically, they also would say if they had a bad quarter, we're not going to give you as much. I think it's more honest. I think it's, but it's also harder for a retiree who's looking at dividend investing as their way to buy a stock. It's harder for them to justify buying this company because it fluctuates, and most people don't want that sort of fluctuation. The company has very little debt, $2.1 million, which on a $1 billion company is effectively no debt. The company is not a member of the S&P 500. If you remember, I did a whole video telling you why I think the S&P 500 is not a place we want to be investing our money. And my research is leaning more and more towards companies that are not in the S&P 500. This company is a member of the S&P 600 mid-cap, which is fine. I don't think that's as overbought as the S&P 500. So I think this is a good reason to consider buying this company. We talk about this all the time, but when I analyze a company, I really grade a company on 29 areas of importance. 9 of those are operating areas. And by operating, I mean how efficiently does the company deliver goods and services to their customers? I look at 10 financial categories, which is really the assets the company has, the liabilities the company has, the debt they have, their interest obligations. How likely is it that those kinds of things are going to negatively impact us as shareholders and or will positively impact us as the company has got either very little debt or has the ability to generate needed cash in an emergency because they don't have much debt. Finally, I have 10 categories that measure the company's management. I strictly look at that as, does the management do a good job of enriching the shareholders? When the company makes profits, how efficiently are they using those profits to enrich me, the shareholder? When looking at this company, it's actually pretty fascinating. Its grade for operating is 2.56, which is, I'm sure, the lowest I've ever suggested you should buy a company. It's only slightly above average in operating. And so that normally would be a red flag and a reason not to buy this company. But this company is very, very high in management score, and it's very, very high in financial scores. When you add all those up, it comes to a grade of 3.21 for its total GPA, which makes it in the highest of the companies that I've looked at in terms of scores. In terms of scale, I've analyzed 895 companies that I'm currently tracking. I've analyzed more than that, but some of those gone out of business, et cetera, et cetera. But I'm basically looking at 895 companies. This company is the 75th highest rated company that I've looked at, and that's despite the fact that its operating is very, very average. So it's a company that's in the top 10% of companies in terms of its general business statistics and the way I look at companies. And it's very, very cheap, trading at 13 times earnings. It has very little debt. I mean, when you add all that up, plus I think that there's going to be significant demand for firearms. Firearms are a hobby of mine. I like to shoot guns. I like to shoot targets. I don't hunt, but I shoot targets. I especially like to take my son out and we go shooting together. And so I know a little bit about this industry. I know how hard it is to get ammunition right now because of the pandemic. I know that there's a lot of pressure on gun manufacturers as a result of the new Biden administration. That's sort of very anti-gun. And I believe that the NRA will continue to protect the rights of gun owners, but I also believe it will put real pressure on gun manufacturers to sell guns to people who are afraid this might be their last chance to buy one. So when you add all that up, from a business point of view, it seems like it's a very solid company to me.